Hello there, I'm here to give you a quick rundown into how your fund's investments have performed in the first half of this financial year and to give you an idea of what to expect next. You might have seen reports about share market price falls recently, which might have raised concerns about the impact on your super balance. The 2018-19 financial year got off to a positive start, but volatility in Australian and international share markets between October and December 2018 meant that several of our investment options, like those of other funds, posted negative returns. Our default option, the Balanced Super Fund, returned minus 0.78% for the 6 months, and the Balanced Pension Fund returned minus 0.97%. You can find details of the 6-month returns for all of First Super's investment options on the investment returns and crediting rate sections of our website. The main economic and political events that affected share markets between July and December 2018 included the US trade war on China, the Chinese economic slowdown and the impact on Australia for exports, Australia's slowing economy and falling house prices, and for the rest of both this financial year and this calendar year, we're expecting further market volatility, that is share markets rising and falling as investors react to economic and political events and risks. Examples of these factors are the US public services shutdown and the impact of the ongoing slowdown of the Chinese economy on Australian markets. The good news is much of this downside has already been priced into market. So what does this mean for investment returns and your super savings? There are 5 thoughts I want you to take away. First, be patient and take a long-term view, because that's what we do with your money. Our investment timeframe for the balanced option is 10 years. We aim to return an average of CPI plus 3.5% a year over that time. That's the key point to remember. Investments can go up and down at any point, but the main thing is achieving an average return over the 10 years. We've had solid long-term performance over the past decade. The balanced option has returned an average of 6.46% a year over the past 10 years and 9.66% a year over the past 5 years. Second, First Super is more conservative with your money than most. Our balanced option has a lower allocation of growth assets than those of many other super funds, for example assets like shares. So as share markets fall, our members' savings are less exposed to these losses. We've also increased our cash holdings in 2018, which also protects against financial loss during share market volatility. So although our balanced super option lost 0.78% in value between 1 July and 31 December, this loss is lower than those experienced by many other funds' MySuper options. Third, if you're contributing, you're buying in more cheaply. For members who have superannuation contributions made on their behalf, or who are making additional super contributions, your money is being invested in assets that are cheaper today than they were yesterday. Of course, those members have also had past contributions invested in assets that were more expensive yesterday than today. Fourth, don't try to outsmart the market. First Super has 5 investment options, each designed to be suitable for members' different risk profiles. At times, some members try to pick the best time to invest. Timing the market is really tricky and potentially costly. We did a study into whether market timing works. We looked at members who moved all of their money into the cash investment option after the global financial crisis and how they got on reinvesting their account into growth assets such as the balanced option. On average, those members lost 1.15% a year each year compared to members who stayed put. Our investment philosophy is to invest for the long run, and this means not overreacting to market volatility that we've seen over the last few months. We're expecting more volatility during 2019, and this is completely normal in investment markets. It's why super funds take a long-term view of investing. Short-term ups and downs generally even themselves out over longer periods. Finally, we're here to help. It's very likely that any questions or concerns that you have are the same of many of our other members. So if you've got queries about your super, you can always talk to our member services team, or for help with your plans about your future, book an appointment with one of our financial advisors. When it comes to investment strategy, our financial advisors can work with you to work out what's the best option for you. taking into account how long you've got in the workforce and how much investment risk you're comfortable with. The outcome is a personalised plan to meet your retirement goals. In the meantime, you can be rest assured that First Super takes a planned approach to managing this market volatility for the good of all of our members. Look for further updates in our Investors First e-newsletters. Thanks for being a member of First Super.